Good morning and welcome to Frontier Opening Bell. Monday, July the 20th. I am Bosin Omofaye. Let's get the show started. Ali Khan Sashu in Nairobi, the CEO and founder at Frontier, at Rich Frontiers Management. Good morning.
Morning, Bosin.
It's good to see you. And in Nigeria, which is another frontier market, is Chima Ukadike, who is the consumer goods analyst at Vetiva Capital Management. Good morning, Chima.
Good morning, Bosin.
Great to have you. Good to have you. Hope we all had a very nice weekend. We have a lot of grounds to cover, so let's just hit the grounds running. Give everyone about 30 seconds review of the equities market. Last week, the Nigerian market finished on the back footing, less than 0.1%. The South African market, which is much bigger, finished 0.33%. Nairobi market was up about 0.2% on Friday. The Egyptian market on Thursday finished off 1.6% negative, and Ivorian market 0.66%. A number of earnings coming through from the Ivorian market, the BRVM, and we'll talk about one of that within the show. But let's move on and show you the East African markets, where Ali will be weighing in very quickly. Some of the stories still around the corporate market, where Williamson Tea, and we talked about tea on Friday, didn't we? Ali, yes. Where we talk about the tea exports for Kenya. I'm sure you talk about Williamson Tea. Meantime, a startup company called Komaza is raising about $28 million to plant 1 billion trees by the year 2030. That is green. That is climate change. That is climate good. It's a good business for the environment. Meantime, Mozambique defaulted once again on the repayment of its 2016 Eurobond, and the Ethiopian issue over the $4 billion hydroelectric dam is still hanging there. Let's have some tea, Ali. Let's start with Williamson Tea.
So I think, Williamson Tea is one of the listed tea companies. It's been at the stock exchange practically since the stock exchange was incorporated. A very famous UK brand, George Williamson, this is an interesting company. It's a small company in terms of the scale of the NSE, but it's well managed, has a very rich balance sheet, and is a great stock in this current environment because of the cash on hand on the balance sheet, the value of the land, which has never been revalued from the cost price. And then, as we discussed on Friday, we've had this surge in production, and Williamson tends to be able to avoid the auction where prices, automatically trend lower when the production's much higher. They're able to push the tea through their own network and into the UK and package it, so there's a lot of value addition for them as well. So I think it's a very interesting company and an interesting play. 20 shillings dividend distribution, which is close to about a 16 to 17% Kenya shilling yield in an environment where T-bills have reduced by about 200 basis points over the last 5 weeks. So you're getting a great carry, you're getting a good dividend, you've got a very rich balance sheet, and I expect that to trend higher, counter trend in the stock market. But it's a small stock, you've got to be prepared to spend a few sessions if you're looking to accumulate it. The second story, Kenya forestry startup Komaza. Kenya, like many parts of Africa, we've got current forest cover is only 6%. This is massive charcoal-related activity, which has denuded our forests. And there's a lot of capital that's available to put to work in this sort of green investment situation. So I think they're tapping into two things: a global appetite for reforestation and green investments. And so this is interesting, pretty chunky, $28 million. It's not a small trade, it's a reasonable trade. And 1 billion trees by 2030. Of course, north of the border, Abbey was planting a lot of trees and has a similar tree rationale as well. But I think that's a positive step. Mozambique, Boson, given that they signed what was the biggest FDI in Africa's history about a week ago, it just defeats me how they could have possibly defaulted on the repayment of a Eurobond. It speaks to us, to me, at a dysfunction in the government, because surely even someone like Total would have given them the cash to make that payment, because the risk of defaulting immediately means your bonds are repriced and the cost of borrowing goes up quite considerably. So I'm quite flummoxed by that development, to be frank, and quite disappointed at them, really. And then finally, sorry.
Yeah, just a quick one, Ali. I want you to give us a minute, because we have an interesting week here. We have Nigeria, we have South Africa, and Angola's monetary policy meeting this week. Nigeria today, South Africa on Thursday, Angola on Friday. Angola has never cut interest rate so far this year. The yield on its 10-year bond about 21%, and of course the debt issue. I want you to give us a minute to think that through between Angola and South Africa, and let's just touch base very quickly with Chinma. Is an interest rate decision week for a number of African countries, and for Nigeria, South Africa, and Angola, this is a very interesting week. This is an interesting week for them. Just a quick second, just a minute there, Ali. Let me talk to Chinma Okadike when we talk about the Nigerian market. The news coming out of over the weekend was that the banks in Nigeria are beginning to tell their customers that there's a restriction on their Naira card in terms of how much they can spend overseas. Some banks are cutting down from $1,000 to $500. The MPC meeting is today. Meantime, the Ghana Stock Exchange and the SEC in Accra have given a yes to 4.4 billion shillings, or CDs, corporate bonds, to be issued by 9 companies. We've seen a raft of corporate bonds on the Nigerian market, and we'll see that's coming through also now in Ghana. Meantime, Senegal, the Fire Limited is selling 50% of its $4.2 billion in the Sangoma oil and gas project. I'm talking about earnings season on the BRVM. The NSIA Bank Cote d'Ivoire is paying $2 billion CFA fund, which is a gross dividend, on July the 27th. That's next week. Chinma, coming here into Nigerian market space when consumer goods is a big story and inflation came in last week, 12.56%.
Yes, Basin, you're right. So, like we said last week, we had expected inflation figures to come in very elevated. We didn't know. Our expectation at Vertiva was about 12.44, but we saw that when it came in, it was 12.56. But the drivers for the inflation, for the increased inflation, were still correct. We had expected food, transport, and health concerns to be the drivers of increased prices, and that's what we saw. So we saw that for food and non-alcoholic beverages, those were the components of the CPI basket that drove up prices. However, we still saw some increases in alcoholic beverages and tobacco. So we not quite surprised, although given the way that we are still seeing prices in the economy with the restraints to logistics and the restraints to and the challenges to farmers, we still expect that we'll still see some pressure on food for a while. If we add that to the fact that there has been some devaluation in the recent months, in July, there has been some devaluation, we still expect to see continuous elevation in CPI. Also, when we add that to the fact that the CBN last week came out to say that it is restricting access to FX for importation of maize, we expect that to be a huge pressure factor for inflation in the coming months, given that maize has a diverse use in terms of domestic use and even industrial use in poultry, agriculture, and in terms of food and beverage, for cereal and the likes, and also for domestic food. People eat maize, they use it to make pap and all those other domestic uses. Maize is a very has a very diverse use. So we expect that to really pressure food in the coming months. However, the CBN has come out to say that it is issuing about 16 billion, if I'm not mistaken, in the Anchor Borrowers Program. This is after it had it had restricted access to forex for maize. So maybe we will see some help for farmers and for maize production in those terms, but we still, for the near term, at least before the loan will take effect, before they'll be able to put that into getting more seedlings, getting more good soil, and clearing more area and planting and all that, and cultivate and harvesting, we should still see the pressure on food prices in the short term. So that's our expectation for inflation.
Great. I'm sure you have some thoughts around the Monetary Policy Committee meeting at Vectiva Capital. You give us your thoughts there later on the show. Let's touch on with the Southern African markets. I want Ali to put all of this together in a basket, as it were, with a few of the issues still around the the East African market. South African market, the emerging markets are under pressure as we speak, but some good news. ABSA is listing additional $1 million new wave exchange traded funds or exchange traded notes on the GSE. And Moody's is keeping a credit rated of BA3 and a stable outlook on Leshego Holdings. Leshego is into a lot of businesses, including financial services, doing some microfinance business or microcredit lending within the Nigerian space outside the Southern African market. And AFDB has okayed the fourth monitoring report for Eskom's Medupi power project. And Zambia tells Glencore, don't stop digging for copper. You can't afford to do that. Ali.
So let me answer, first of all, your question regarding South African interest rates. We saw one of the lowest inflation prints last week, 2.1% below target. And I think that essentially gives room for the SARB, the South African Reserve Bank, to cut rates. I'm not expecting a dramatic cut, but I'm expecting an incremental cut out of the South African Reserve Bank this week. You were also touching on Angola monetary policy. I think they're in a catch-22. Okay, they've got, it looks like, some kind of relief in the debt moratorium negotiation, but with inflation running away in Angola, in part because of the weak currency, it's very difficult, I think, for them to go down the path that Nigeria and Kenya have gone, which is to dramatically reduce local interest rates. So that's what I'm looking at. Of course, in South Africa, ranking sixth in COVID cases worldwide now. Fortunately, the case fatality rate remains low, but the impression I have is that there's a massive undercounting of deaths, unfortunately, in South Africa, and that's being backed up by other data points. So, you know, we do operate, unfortunately, sometimes in a data black hole, but essentially, you know, they've jumped to number 6. They are wrestling with what is a exponential breakout right now. To go to the other stories, let me just talk about Zambia. Glencore have had some very tough negotiations with the Zambian government for a while now. Zambia, of course, this is the main source of foreign exchange for the government, and they were unhappy when Glencore were talking about doing some maintenance operations and therefore suspending operations. But remember, when Glencore were looking at that, the price of copper was about 20 to 25% lower than where it is now. So I think from Glencore's perspective, it probably aligns with the government right now to keep digging because of the prices that they're able to get on the international market. You know, we've had this tremendous rally in the copper price. It's gone into a bull market. It's a lot to do with supply out of Latin America. If I was the Zambian government or Glencore, I'd be looking to hedge out at these prices because I don't think it's sustainable given the general macro and global economy situation. And finally, as you said, Leshego Holdings, interesting mix of businesses, and that's supportive from Moody's because all I ever see these days are Moody's headlines of downgrades, and the fact they've kept it stable really is a noteworthy development.
It's a season of downgrades. If you look at the sovereigns, even South Africa is getting some knocks and say, hold on a second, if your debt remains unsustainable, we will have to do something more about you. You get deeper and deeper into junk territory. Outlook across some sovereigns have gone from stable to negative. So, and that is not good news, as it were. So the IMF and the World Bank still say we need more debt relief for a number of emerging and frontier markets. But let's touch on very quickly back on Nigeria. Chima, today's monetary policy meeting there is going to be a one-day meeting, 2:30 local time or so. We'll hear from the governor of the central bank. What's your take at Vetiver Capital around today's interest rate decision, and what do you think will inform how the MPC decides?
I think that the MPC will leave the MPR unchanged at 12.5%. This is because we have, if you look at the current inflation rate, we are looking at 12.56, which we now have inflation rates at 6 bips higher than the interest rates, the benchmark interest rates of the government. So some will argue that this is not really reflective of what is happening in the market, given that if you look at fixed income market, look at automobiles, fixed income, treasury bills, NTBs, commercial lending, commercial papers, and all that, they are way below the MPR. And so some will argue that the MPR is not really indicative of what is going on in the real economy. And so whatever the CBN decides to do, whether to reduce rates or increase rates, does not really affect the economy, the other relevant rates effectively. However, we don't see that it is something of a, we don't think it's a good stance to for the CBN for the MPC, to take rates down any further, given the position we are with inflation. Also, when we look at the fact that it was just at the last meeting that they were able to reduce rates to 12.5% from 13.5%, we believe that there should be some time lag for them to see how the effect of the rate downgrade has been. So we don't think that this time has been, because if you look at the previous time when rates were reduced, that was in like March 2019, there was like a 1 year time difference, although we would argue also that the circumstances now are different. The CBN is trying to influence growth while trying to maintain low inflation. I think they have a band of about 6%, 6-9%. So they are kind of in a dicey situation, trying to influence growth with lower rates, but then still trying to make sure that inflation doesn't get out of hand. So we don't see that there will be a decline in rates to help SMEs and other businesses that want to lend to grow the economy, but we don't see that there will be an increase. I think that is a hold. Yeah, I think that's a hold.
Yeah, and of course, a hike is completely out of it.
What?
A rate hike is
yes,
totally
a rate hike. We don't see a rate hike. However, we believe that if the CBN, one thing that CBN can do is to tweak the CRR if they want to help liquidity and help the banks to continue to lend out more money to the economy in this time. That's something that we think that the MPC will be able to touch, because apart from the 27.5% CRR that is required of banks to maintain, they also have these CRR debits they do sometimes when they can see a lot of liquidity in the banks, stopping them from going too much on fixed income securities and trying to encourage them to increase their LDRs and to give out more loans to the real sector of the economy. So we think that that's one thing they can ease up on, the CRR debits, to help with the economy. But we don't think that there will be a hike in the, we think that what will happen, we'll see a hold in the MPR today.
Interesting. CRR is everyone's, it looks like that's the tool now that the central bank can use to try to moderate liquidity, try to jack it up, encourage the banks. If they're getting squeezed because there's an extension of loans, of credit, repayments, and what have you, what are the FX evaluation will mean on the books of the banks. We'll try and see that, because the bank's earnings season was just coming through now, and we are sure that at least the top guys will have some FX evaluation gains because of what we saw in March, April, and May, and June. So, to all intents and purposes, the CRR will be the only way to go to try to give them a breathing space, as it were. Let's touch on North Africa. Thank you so much, Chima. Let's talk on the Northern African market, where the stories around some of the markets remain very, very interesting. Again, Egypt remains everyone's big focus. Sawa Capital is issuing 2.5 billion Egyptian pounds Sukuk bonds this year. Sukuk is the big name. Is the big game in town right now. Meantime, the country's internal trade is about 18% of GDP, but the Minister of Trade for Egypt says all that is despite the inadequate infrastructure that they have in the country. Tunisian beverage company SFBT is listing 198 million ordinary shares after its finished capital increase, and Casablanca market was not so, it was lackluster late last week when we finished up. Ali, we're in on the North African markets. What's your take here?
So I think it's interesting. I think there's a lot of liquidity in the Sukuk market. I think that announcement by Sawa Capital is confirming that build-up of liquidity, and I think that would be positive for even Nigeria, where you've tapped Sukuk liquidity before. Here in Kenya, we've talked the talk, but we haven't walked the walk yet. And I think here as well, the Treasury would be well advised to be looking at that Sukuk market for liquidity purposes. I found that interesting. The Egyptian internal trade is 18% of GDP, but inadequate because of infrastructure. I'm sure most of us from Lagos to Nairobi would appreciate the quality of infrastructure they've got in Egypt, which is a lot better than ours. So I think that what they're talking about there is low-hanging fruit. That look, we can boost it more, and that's definitely the case. Obviously, Egypt has had quite a restrictive lockdown, but now they're opening up. Tourism, I saw, is that they've opened up the whole tourism sector, which is a big sector for them. But overall, I think Egypt is in a slightly better place than the rest of us, and will post positive GDP growth this year, around 2–2.5%. Tunis Beverage Company, that's just a capital increase. They're not selling extra shares. So it's not really testing the liquidity in the Tunis Stock Exchange at the moment. Casablanca, really flat. But Morocco, I think these North African markets will actually be the first to come out of the blocks once people see a recovery. But that recovery is still, I'm afraid, a few months away. Geopolitically, just to touch on that, we've still got the problem in Libya. There was a lot of activity around Sirte. Sirte is where the Haftar is hanging around. He's being supported by the UAE and Egypt, but there was a lot of military activity over the weekend there. So we've got to keep an eye on that development. And then we still haven't got a resolution on the issue with the Ethiopians, the dam. But what I did notice was I've been following some of the commentary, particularly out of both governments through various proxies, is that there's been a bit of a dialing down in some of the more aggressive type of language I was seeing a couple of weeks ago. So I think maybe, they've all made their points, and now they're going to try and find some kind of accommodation, because, the world has seen everything. The last thing we want is another blow up anywhere. Yeah.
No, not at all. It looks like the rhetorics are toning down. Remember, Ethiopia said, we know all about warfare. We know how to put it. We can put 1 million men on the war front and give them guns and what have you. Then Sudan, then Egypt, where everybody's trying to flex muscles. I'm sure with Egypt trying to deal with Libya, on the other hand, we don't want to get too much into a problem. With Ethiopia, on the other hand, you can't fight both at the same time. One is already messy war in Libya, very messy, very kind of insurgency. It's going to damage your economy, so you better take what you have. Try and, so I like the accommodating tone that we're beginning to see within that Horn of Africa and the North. Let's wrap up the show a bit this way. What else is in the news? This Monday to start the brand new market week in July, the final full week in the new month. Once we come back on Monday, we have just a few days left. In other news, part of the story across the African market relates to Egypt issuing 18 billion Egyptian pounds treasury bills on Sunday. That was yesterday. Meantime, Morocco and Greece are launching a new chamber of commerce to boost bilateral trade. This is that handshake across the Mediterranean, I'm sure Ali, you know, with with the Greek authority to make sure that, look, things can work out, get some bilateral trade on your side, mitigate the impact of COVID-19, get things done very quickly, get the tourists flowing down to Morocco, because you can't wait. That's the story. But quick one, Ali, before you wrap it up, let me ask Chima, what's your take on our equity coverage on your equity coverage for consumer goods this week for Nigeria?
Thank you, Basim. So for the week, coming from last week, we saw that the equity market was quite bearish. The market lost 8 bips week on week. On Friday was about 17 bips. Most of the sectors were bearish, so bearish sentiment in the banking sector, consumer goods sector. I think just the industrial goods sector turned out a bit positive. For this week, given that we should be seeing some of the results trickle in now, some of the H1 results trickle in now, and given our expectation of poor performances across board in varying degrees, of course, depending on the segments in which these companies operate, we expect that we would see some slight bearish sentiment on some of these stocks, but that's our expectation for the week. We should still see this bearish sentiment we saw from last week extending to this week, but that's depending on the kind of results we get, on the results we get from the companies for the H1 season. Thank you,
Chima. We appreciate your time. Ali, this handshake between Morocco and Greece, it looks like love thy neighbor. I love that. I like it.
So I agree with you. The Mediterranean,
in your best interest.
It's so important, but the only issue there, of course, is that you've got Greece and Turkey in opposition, not only in Libya, but it's interesting that Morocco has reached out to Greece. I don't know what President Erdogan might think of that. But, you know, the Mediterranean economy is really key. It is Southern Europe's border. It's a geopolitically important, and anything that's positive, I think, is a good development.
Thank you so much, Ali. It's been a very interesting Monday. Let's leave it there for today. Thank you, Ali Kansachu in Nairobi, the CEO and founder of Rich Frontiers Management. Thank you. Have a great week ahead. And Chima Ukadike, we appreciate your time as well. Our consumer goods analyst at Vertivo Capital Management. Have a great week, everyone. See you again tomorrow on this show. Bye.